Hello folks, it is Sunday, August the 7th. I'm going to talk about my favorite topic, which of course is gold, and we'll get to the charts here in a few minutes. Everything I'm going to talk about in this video relates back to gold, even censorship. And so you might ask me, well, how does censorship relate to gold? Remember in the recent video where Bob and I talked about the money revelation, one of Bob's comments was, we are at the end of empire. And in my mind, one of the signs that what Bob said is true is the fact that we are being censored. And so I want you to see this email from YouTube. And in case you're unaware, YouTube took that video down. So the interview between Bob and I was taken down by YouTube. This is the email I received. And so if anybody tries to tell you that, oh no, we're not being censored, well, BS, we are. If you try to talk about anything that does not support the official narrative, you will run into censorship. And let me show you here. How your content violated the policy. And there it is. You can read that for yourself. And so I will go through and edit that video. I'll remove references to the election and Ukraine situation just so I don't run into those two red flags. But censorship relates to gold because we are at the end of empire. And historically, when you're looking at, okay, how do I transport the wealth that I have today into whatever comes next? Well, gold and silver, those are the proven assets. You know, that's how you get from one empire to the next, in my opinion. And of course, you know, we talk about history. And here's another topic that is treading on dangerous grounds, but if you're watching the news stream, the narrative is currently shifting. And so we have international organizations like Amnesty International coming out in the last week, and they're changing the narrative about what's going on in Ukraine. And so currently, Zelensky is being painted as the bad guy. Basically, they're going to make him the fall guy for things not going well in that situation. So let's move on. Next topic. You don't need me, folks. What the heck do I know? I'm a good old boy from Texas. I got an engineering degree because I wanted to do engineering stuff. And yet, here I am talking about gold and you know, money and world geopolitics. I mean, how in the heck did that happen? You know, I'm just a good old boy. I don't know anything. So let me share with you the resources that I follow relating to precious metals. This is the money changer. And so his name is, it's Franklin Sanders. He's been a precious metals investor for 30 plus years, probably going on 40 years. He's got a free newsletter. You can sign up for it right there. And in his free newsletter, and so this is one of the resources that I follow, he gives insight. This primary reason that I follow him, he's also a precious metals dealer. And so he gives valuable insight into what is happening in the physical world of precious metals. And so here he is. This is from July 26, and he's sharing that premiums. So premiums on physical precious metals, gold and silver, typically, you know, it runs in cycles. So premiums become high and then they come back down low and high, low, etc. What he's saying here is that premiums have been high for 19 months without any pullback. They're just, you know, they're high and they're continuing higher. And that's especially true of silver products. premiums are very high on silver products right now. If you're unaware, the premium on a silver American Eagle right now is 60+%. Just crazy. I think the chart's in here. Yeah, so here we go. Silver American Eagle premium 67% right there. Silver rounds, this is just a generic silver round, 15%. And notice that two different prices, whether you want them in 4 weeks or 11 weeks, 11% versus 15%. And so anyway, Franklin Sanders is an excellent resource for precious metals. Free newsletter on his website. Bob Moriarty, 321 Gold. Bob's a jewel. So, you know, pay attention to what Bob has to say. He publishes his own work. Typically, you'll see his work is highlighted. There's the video I was just referring to, the Money Revelation. He replaced the YouTube link with a link to Vimeo. I've got channels on Vimeo and BitChute, a couple other places. And so I put my content, video content on YouTube, but I also put it on BitChute and Vimeo. So anyway, Bob is an excellent resource. And then JS Mindset, and then this is Jim Sinclair. Jim suffered a stroke a couple of years ago, and so his speech is not clear. And I think people also discount what Jim has to say at this point because he's you know, because of his speech impediment and because he's a elderly man, which, you know, we all get old, and being old doesn't discount Jim's experience and wisdom. So this is an excellent resource. Bill Holter has taken over the reins of this website, and so you'll find content from Bill Holter primarily here. There are 2 interviews on here from last week where we got interviews. Here we go. They're podcasts. So insight into Jim's life as a trader, investor, and gold miner. Of course, he's got a gold mine in Tanzania. Last resource that I'll point you at is Zero Hedge. And so, in my opinion, anything of significance that happens in the economic world will show up quickly on Zero Hedge. Now, a lot of the content on Zero Hedge is very low quality. It's, you know, they're using writers that don't necessarily speak English as their primary language. But I keep an eye on Zero Hedge, mostly look at the headlines. Some of the articles are actually good quality. You know, not a lot of them, but some of them are good good quality articles. And so anyway, if you want a single source to monitor the news stream in economic matters, I suggest that Zero Hedge will let you do that. And let's see, what do we got next? Oh, so notice this article, gold is going above $2,500. And I agree with that. Yes, gold is going above $2,500. Will it happen by the end of 2022? Maybe. This person is not the only analyst who is making that suggestion. We'll see. You know, time will tell. And so in that article, he gives a couple of catalysts for why he believes gold will head to 2,500. The first one is the Fed pivot. And of course, the Fed pivot is the idea that at some point the U.S. Fed is going to come out and say, oh, we were wrong. We're no longer going to do quantitative tightening. We're going to shift back into quantitative easing. And of course, the reality is they're not doing quantitative tightening in the first place. They never left quantitative easing. In the background, they're out there buying up all the debt instruments they put their hands on, government debt, municipal debt, corporate debt, you name it, they're buying it. That's true of both the Fed and the ECB. Of course, the ECB came out, I think it was week prior to last, came right out with their new policy where they're saying unlimited buying of, they only admitted to government debt, but they're going to, unlimited buying of government debt throughout the EU. So all of the countries in the EU. And of course, the Fed is doing it as well. They just haven't made it public policy anymore. And so anyway, the idea of the Fed pivot is that they will reverse policy, that their official narrative will shift from quantitative tightening back to quantitative easing. I personally don't think that will happen. If the Fed comes out and acknowledges that they are going to shift back into quantitative easing, which they're doing anyway, gold's going to go ballistic. It'll hit at least $2,500 and probably do it quite quickly. And so I don't believe that the Fed is going to publicly pivot. But again, to be repetitive, they haven't left quantitative easing mode. In the background, they are furiously printing currency to support the debt markets and the equity markets. So that's what they're doing in the background, regardless of what the official narrative is. This IORB, without looking, I couldn't even tell you what the acronym stands for. This is one of the things that the Fed is currently up to. Here it is. Interest on reserve balances, IORB. This is one of the policy tools that the Fed uses. And so remember, central banks only have two tools. They got bullshit. That's the narrative. Their talking heads get on TV, and anybody that'll let them talk, and they tell you, oh, quantitative tightening. That's the bullshit. That's the narrative. And then their second tool is a printing press. So keep in mind, regardless of what you see them say, they only have two tools: bullshit and a printing press. And so policy tools, this is part of their narrative. They want you to believe that they have this toolkit, the bright red toolkit, and it's shiny and everything, and you open it up, and they got all these chrome tools, and, we'll use this tool today and that tool next week. Well, this is one of the tools that they would tell you about. The details of this, if you want to dig into it. So the Federal Reserve prints up a bunch of currency, and then they hand it out to the Federal Reserve banks. And I think there are 36 banks in the Federal Reserve system. So Federal Reserve prints up a bunch of money, they hand it out to the Federal Reserve banking system, the 36 banks, and then they pay those banks interest. And so it's like, you give your teenager an allowance, and then you pay the kid interest on the allowance. That's what's happening here. But remember, although they call this a tool, it's based on printing press money. They printed money to give to the banks, and then they printed more money to pay those banks interest. So all of this policy tool, the shiny chrome socket wrench, or whatever you want to think of it as, is merely a mechanism to put printing press money into the banking system. This is an article that was published on JS Mindset. So again, excellent resource. You can do this for yourself, folks. And in this article, the author, Stan Szymanski, I probably just horribly mangled his last name. Sorry, Stan. He's explaining that mechanism where the Fed prints money, gives it to the banks, and then pays them interest on the money that they just gave. I mean, You know, it's amazing. And again, let me relate this back to gold, because remember, everything I'm going to talk about in this video relates back to gold. This is printing press money. They're creating inflation by continually printing more money. Inflation it should be causing the price of gold to go up, but there are other mechanisms for suppressing the price of gold. But all this printing press money is creating inflation. And the only way we can protect ourselves from inflation is to put our wealth, our money, into physical gold and silver. And so again, everything we're talking about here relates back to gold. The official inflation rate, the official inflation rate at this point is 9.1%. They announced that in, what was it, late June, early July, 9.1%. This is John Williams' website, Shadow Stats. He publishes this chart for free, so another good resource. This chart doesn't change very often. It changes monthly, so he publishes a new CPI when the Federal Reserve comes out with their latest official inflation number. And so anyway, currently John Williams is showing that the real inflation rate is 17%. So officially 9.1%. Oh, and it's the BLS, Bureau of Labor and Statistics. They publish CPI, not the Fed. So excuse me there. So officially 17%, and back to this, catalysts for gold and the Fed pivot. Well, if they were serious about fighting inflation, they would have to put the interest rates at least higher than 9.1%. You know, they'd have to jump to, 10%, 15%. If we acknowledged that the real inflation rate is 17%, we'd need interest rates at 18% or 20%, like we had back in the Volcker days, Paul Volcker, when he was at the helm of the Federal, was he the Federal Reserve or the Treasury? I forget which, without looking. But anyway, the idea that the Fed is trying to fight inflation, that's BS. That's just a narrative. They're not serious about fighting inflation, but it gives them a good cover story. And so that's one of the points that Stan is making in this article, or actually it's the key point that he's making in this article. The idea that the Fed is trying to fight inflation, it gives them a smokescreen to continue printing money and pumping that money into the Federal Reserve banks. That basically the banks are at risk of failing. We've got a global debt collapse currently in progress. It started with the collapse, or when Evergrande, the Chinese real estate developer, defaulted on their $300 billion in debt back in December of 2021. That was the first domino to fall in the global debt collapse. We're 7 months, 8 months into the collapse, and here we have the Federal Reserve and, of course, ECB doing the same thing. They're trying to prevent that collapse of the debt system. What Stan is saying is that this fighting inflation gives them a convenient cover story to liquefy, basically pump money into the banks. And so let's keep rolling here. What do we got next? I mentioned this article in my last video, but I was thinking about it afterwards, and this is a very candid admission from a politician. He's the Minister of Economy, banker, financer, whatever. He's a politician. He's a talking head. This is a candid admission from him that printing money leads directly to inflation. And you don't get politicians, much less bankers, acknowledging that. They want to deny that printing money has anything to do with inflation. They even come out with fancy theories like MMT, you know, modern monetary theory, that basically central banks can print all the money they want because we're in this new modern economy, and that doesn't create inflation. Well, of course, you know, that's pure bullshit, but that's what they want us to believe. And of course, Milton Friedman, he said it so well. Inflation is always and everywhere a monetary phenomenon. When they print money, it leads immediately to inflation. When that printed money gets into the economy, the result is inflation. We're seeing it in spades. And I just wanted to emphasize that this is a unique admission from a talking head that printing money leads directly to inflation. Let's keep rolling. So this was another catalyst that the author of that article, $2,500 Gold, mentioned, that the strength in the US dollar is going to end. And hopefully I made it clear. What I was trying to point out in my last video on the dollar is, in my opinion, the strength in the US dollar is not going to end. It's going to continue. I suspect that the US dollar is headed to 120 at least. If we look at the basket of currencies, the 6 currencies that make up the US dollar basket, 83% of that basket is the euro, the pound, and the yen. And so let's consider the euro and the pound. Those currencies are likely to continue declining because of energy shortages and soon to be food shortages. That'll be the next crisis in Europe, and of course in America as well. Food shortages. And then in Japan, the yen will continue lower because their economic minister, finance minister, and government are continuing with their easy money policies. So we got the whole world claiming that they are tightening, and here's Japan continuing with their easy money policies. And so the yen is not likely to strengthen. It's most likely going to continue weakening because of this easy money policy. I didn't make the point in my video on the dollar, but I've made it in the past. Currencies don't exist in a vacuum. They are measured relative to one another. So, you know, when we look at a chart of the euro, we're not looking at just the euro. We're looking at the euro relative to something else. And so when we talk about the basket of currencies that make up the US dollar, each of the currencies in the basket is being measured relative to the US dollar. And so weakness in the euro means strength in the US dollar. And so when we have 83% of the basket, euro, pound, and yen, getting weaker, there's no choice, or there's no alternative other than the US dollar gaining strength. And so again, I don't believe that the US dollar is going to weaken. I believe it will continue strengthening. This is the next catalyst for gold. And I forget whether he talks about that in his article on $2,500 gold. In my opinion, this will be the real catalyst for gold heading higher, significantly higher, is when the BRICS currencies come out, if they choose to back those currencies with gold. Russia and China have lots of gold at this point. Each of those countries has more than tripled their gold reserves in the last 10 years. They've got enough gold at this point to back a BRICS currency with gold if they choose to. In my interview with Bob, one of the things he mentioned is he doesn't think this will happen until the situation in Ukraine is cleanly resolved, until it is resolved. Bob doesn't think that we'll get an official announcement of a BRICS currency backed by gold. Again, time will tell. This is my thought on this topic. Any country that threatens U.S. dollar, I'm never sure how to pronounce this word, homogeny, I think it is, that any country that threatens U.S. dollar hegemony, anyway, basically gets a military action directed at them. And so, it was Iraq, it was Libya, how many countries do you want to name that they came out and directly threatened the U.S. dollar? That's certainly true of Iraq and Libya. And those countries don't exist in the same form that they did at the time the threat was made. And so actually doing this, coming out and backing a BRICS currency with gold, in my opinion, that would be a major escalation of the geopolitical situation. If Russia and China decide that they are done with the West, truly done with the West, ain't going to play their game anymore, that in my opinion, that's what they would be saying if they come out with a BRICS currency backed by gold. They're basically saying, we ain't playing the West's game anymore, because they understand this. They understand what happens when you threaten U.S. dollar hegemony. Let me keep rolling. This article, I guess it doesn't directly relate to gold, but it actually made me laugh. So, you can read that headline for yourself. And then if we scroll down, this is what made me laugh. The self-spreading vaccines have roots in efforts to reduce pest populations. And so if you aren't aware of it, we are the pests at this point in the eyes of the globalists. We are the pests. They want to eliminate 90% of us. And their current policies, Klaus Schwab with the "you will eat bugs," and EU shooting themselves in the foot, cutting off their energy supply. You're going to freeze this winter. All of this backed by or directed by the World Economic Forum. They're trying to eliminate us because we are the pests. And so anyway, this article amused me. Let's jump into the charts at this point. I'm at 28 minutes already. Sorry for rambling on so long, folks. Let's see. So this is in the upper frame. We have gold in the monthly time frame. This is gold versus the U.S. dollar. So gold measured in the U.S. dollar. And we can see a series of higher highs. So this was the peak back in January of 1980. Gold hit 850, 875, depending on which chart you want to look at. Then we got a nominal new high back at the end of the last bull market. That's late 2011. And then we got a nominal new high in mid 2020. Well, when we deflate gold by the inflation rate, and actually I used twice the inflation rate because, as we saw just a few minutes ago, the real inflation rate is at least double what the BLS claims it is. It's not double, it's almost double. It's 17% instead of 9%. So I deflate gold by twice the CPI to get this chart. And we can see that in real dollars, deflated dollars, deflated meaning the purchasing power that our dollars actually have today, we can see that we have not had new nominal highs. This high is nowhere near the high that was reached in 1980, and this high was even lower than the high in 2011. And so I like looking at this chart to keep in mind what inflation does to the purchasing power of our money. Basically, anything that is measured in the US dollar, stocks, bonds, real estate, the rent from real estate, all of those assets are declining in real value because the purchasing power of the US dollar is declining. And just like to keep that in mind. This is gold in the monthly time frame. We looked at this chart recently. Gold is currently bouncing off this horizontal support level. It's also the lower median line extension of this shift pitchfork. We've got MACD in bull mode, which suggests that the primary trend in gold remains upwards. Energy very low at this point. Gold in the weekly time frame. Again, we're currently experiencing a bounce off a support level. You can see, resistance and then support, multiple tests of this level as support. We got a bounce off of that level as support again. In my opinion, this is just a counter trend rally that basically gold remains gold in nominal terms. Gold as measured in the US dollar remains in a downtrend. This is just a counter trend rally that's in the process of rolling over. And I certainly hope that I am wrong there, folks, but to my eye, this is a technical downtrend. High, low, lower high, lower low, lower high, and then next will be a lower low. And unfortunately, that's just what I think is going on here. Gold in the daily time frame, again, pushing into resistance at this horizontal level. There we have it as support, support, resistance, resistance, resistance. We also have resistance at the median line of the shift pitchfork, resistance at the 50-day moving average. Actually, we're playing with 50-day moving average as support or resistance. Take your pick. Obviously, the 20-day moving average acting as support. MACD trying to get it back up into bull mode. Notice that histogram is going back and forth between strength and weakness. Currently on a buy signal, energy is elevated. So in the short term, gold could certainly push higher. And obviously that's what we'd like to see. Going to run into another layer of resistance up here at the 200-day moving average. That would be 1840. It'd be nice to see gold push up to that level here in the short term. Silver, this is silver in the monthly time frame. Again, in the upper chart, we've got silver as measured in the US dollar. Lower chart is deflated by twice the CPI, inflation rate. And again, even more dramatically than gold, this was the high in January of 80, or it looks at, March of 80. Anyway, early 80. This was the high in 2011, and then there was this was not a new high, it was actually $50 again. Or no, it wasn't 50, it was 30. Anyway, again, just the visual depiction of what inflation does to our assets over time. That everything measured in the US dollar is losing value, steadily losing value. Here we have silver in the monthly time frame, bouncing off support. You can see last month's candlestick was very bullish. I think in Japanese candlestick terms, that would be called a morning star. It's a doji candle with a very long lower tail. We can see that price is kind of hanging out at the closing level of last month's candle. We've got MACD on a sell signal, still in bull mode, suggesting that the primary trend is upwards, but dropping down into bear mode. Energy is very low. Silver in the weekly time frame, we're getting a bounce off this horizontal support resistance level, pushing into resistance at the 10-week moving average, playing with support and resistance along the lower median line of this modified shift pitchfork. We can see here it acted as support. We got a bounce, and then silver, the price of silver, pushed right through that level. We'd call this a zoom and a retest. In Andrew's pitchforks, there are 5 behaviors that we can expect when price interacts with a median line. A zoom and retest is one of those behaviors, and that's what we're seeing here. Price zoomed through that median line and then retested it from below and then fell off from there. The test failed. The resistance at that level was too strong. Price was unable to overcome that resistance. It dropped lower. Now we're back. We're testing that level again as resistance, trying to establish that level as support. MACD in bear mode, histogram suggesting that MACD wants to head higher. So hopefully we'll get a new buy signal in silver shortly. MACD is low but rising. Silver in the daily time frame, again pushing into multiple layers of resistance. We've got this horizontal support resistance level. We've got the 50-day moving average, and we've got the upper median line extension of this Andrews pitchfork. MACD on a buy signal, but in bear mode, energy very elevated, finding support on the 20-day moving average. So anyway, silver is poised for a move higher if it can push through this resistance. One last thing and we will be done. This is just close out the catalysts for gold. And so I looked at that article that's on Zero Hedge, that the catalysts for gold to hit $2,500. In my mind, they're basically hoping. I hope that gold goes to $2,500. And I do. I'm certainly hoping that it goes to $2,500 and higher. But hope isn't an investment strategy. Don't get out of paper assets and into gold because you hope gold is going higher. Get out of paper assets because everything else is going down. Everything that is measured in the US dollar is losing value, rapidly losing value. This is the end of empire. I don't know what else to say. So we need to get out of paper assets because all of them are going down. And again, stocks, bonds, crypto, real estate, the income from any of those assets. If you're the rock and roll superstar stock trader, the income that you are earning from your stock trades, in my opinion, you need to be putting that money, your profits, into physical assets. That means silver and gold. And kudos to you if you're actually able to trade successfully on a regular basis. Kudos. That's a significant milestone in the life of a trader. So hope isn't an investment strategy. Don't get out of paper assets based on hope. Get out of paper assets because everything else is going down. That's it. I'm going to shut up. Have a fantastic week, folks. Hope that I've provided you some value today. Talk to you soon.